Hi and welcome to a new video with Athena Quant. Okay, let's dive into a powerful concept that can give you a peek into what the market's biggest players are doing, before they even make their move. So, here's what we're going to cover. We'll kick things off with a problem every single trader runs into. Then, we'll talk about following the smart money to find the solution. After that, we'll get into decoding their signals, building a real practical workflow, and finally, showing you how all of this can become your new edge in the market. All right, so let's start by setting the scene with a frustratingly common scenario that I'm pretty sure many of you have been through. You ever have this happen? You're glued to the charts, you've done all your homework, and then bam, a stock just takes off out of nowhere with absolutely no warning. Or maybe there was a warning, you just couldn't see it. Okay, think about this. You're watching Apple. It's been flat as a pancake all day. But behind the scenes, a hedge fund just dropped $3 million buying 20,000 call options. What happens next? The next day, Apple surges 5%. And you missed it. See, this is a classic situation. While the stock chart can look totally quiet, the options market is often buzzing with activity right under the surface. This is where we find something called unusual options activity, or UOA. And trust me, it can be a massive clue about what's coming. And this is the crucial part right here. These huge options trades, they often act like a telegraph, right? They're signaling what the big institutions are planning to do before it ever shows up in the stock price. And as you can see from this timeline, this kind of options flow can give you a 1 to 3 day head start. That's huge. So, why is this data so incredibly powerful? Well, it's actually pretty simple when you boil it down. It's all about following the people with the best information and, let's be honest, the deepest pockets. These 4 points, they really work together to give you this powerful edge. It's more than just an early warning system. I mean, look at the leverage. A $2 million options bet can control over $40 million in stock. That is not a casual trade. That's a sign of some serious conviction. So what you're really doing is piggybacking on institutional-grade research without needing their massive budget. And this NVIDIA trade, wow. It's a perfect example. So right before a major earnings announcement, over $50 million in call premium, which is basically just money spent on bets that the stock will go up, it just flooded the market. The options flow was screaming, giving this crystal clear signal of institutional buying just before a massive headline-making rally. Incredible. All right, so how do we actually turn all this data into signals we can use? Let's decode the flow, because you really need to know that not all options activity is created equal. Far from it. Okay, first up, you've got what are called block trades. When you see a single massive order for, say, thousands of contracts all at once, you know one big player is making a serious move. It's a really clear signal coming from a single source. But a sweep? A sweep is different. A sweep is a sign of pure desperation. It's an institution trying to get into a position right now. They're hitting every single exchange available to scoop up contracts, and they don't care about the cost. That just screams urgency. And the price they pay? Oh, that's key. So aggressive buyers, they'll pay the asking price because they just want in, immediately. That's a very bullish signal. Passive orders, on the other hand, well, they just sit there at the bid price, waiting patiently. This could be someone just selling or maybe closing a position. It's a much, much weaker, almost neutral signal. And we can actually put a number on this. By looking at where the trade was executed, between the bid and ask price, we can assign an aggressiveness score. Anything over 70%, that's a really strong indicator of high conviction and urgency. Okay, so you've got the signals. Now, how do you actually integrate them into a practical, repeatable trading strategy? Let's talk workflow. So the workflow is actually a simple 4-step process. Step 1, your morning scan. You review yesterday's flow to build your watch list for the day. Step 2, you monitor for real-time actionable trades during the day. Step 3, and listen, this one is crucial. You confirm your entry with a technical signal on the chart. And finally, step 4, you use the strength of that flow to help you decide on your position size. See? Find the signal, confirm it, and then act. Let's look at a real-world example. An institution placed this monster $1.75 million bet on Tesla. The aggressiveness score was 90%, and the urgency was just off the charts. I mean, every single metric pointed to a strong bullish signal. And the result? The stock rallied right to their target within just 10 days. Wild. But, and this is a big but, this isn't some foolproof system. You have to be smart about it.
Don't just blindly follow every single trade you see. Some of them are just people closing out old positions, or they could even be hedges, like insurance bets against another position. And definitely don't chase a move that's already happened. Most importantly, remember that even the big institutions get it wrong sometimes. This is a signal, not a guarantee. So always use your own risk management.
All right, let's bring it all home with the most important takeaways that you can start applying right away. Look, if you remember nothing else from this explainer, remember these 3 rules. 1, follow the size. Big money moves matter. 2, sweeps are king. They signal the most extreme urgency and conviction. And 3, always confirm with the chart. The flow tells you what to watch, but the technicals tell you when to pull the trigger. It's like the flow tells you where the battle might be, but the chart tells you when the first shot has been fired. At the end of the day, the best way to use this is as another powerful tool in your analytical toolbox. It's not some crystal ball that replaces good analysis, but it is a really unique lens that can show you things you just can't see anywhere else. So I'll leave you with this question. How would your trading change if you could see what the market's biggest players were planning to do tomorrow? That's the potential of what we've talked about today. It's really about adding a whole new layer of intelligence to your process, and maybe, just maybe, shifting the odds a little bit more in your favor.